Good morning, folks. It is Tuesday, December 6th. It's about 6:20 East Coast time. Let's take a look at all the markets this morning. Here's gold in the monthly time frame. Recent action, we're still calling this a continuation pattern and assuming that gold has found support and is pressing higher. Our target based on this pattern is about 2,600. And remember that we're in the strong seasonal period for the precious metals that runs through February or so. MACD remains in bull mode, suggesting that the primary trend is upwards. We can see based on histogram that MACD appears to be turning back to the upside. Energy is in the lower quarter of its range based on stochastics. In the weekly time frame, we can see that gold is pushing up into resistance at the 10-week moving average, and we've also got this is the second median line extension of this shift pitchfork, could also be providing resistance. We've got a minor support level, this horizontal zone, kind of sloppy action through that level. So we're not going to put a lot of weight on that. MACD remains in bear mode, but pressing higher. We're currently on a buy signal. Energy is very elevated. Let's continue daily time frame. So I noticed this weekend that we got a very nice head and shoulders pattern in the daily time frame here. I'll show it in the next chart. If you're used to looking at these patterns, you can see it right there. And so anyway, gold pushed up into the neckline of this pattern and is now rolling over, but appears to have found support at this horizontal level. We can call that a support resistance zone at this point. Resistance on that candle, big push through, and now what I'm hoping is happening here is that price is pulling back, testing this level for support, and then will head higher. And if you want to look at this in breakout terms, this was our breakout. And quite common that on a breakout, price pulls back to the breakout level, tests it for support, and then reverses in the direction it was going. So now MACD, we are overbought on MACD. Notice that we are in bull mode as well. So primary trend upwards, energy is very elevated. So let's look at that head and shoulders pattern. Let me get rid of some of this other stuff, make it more obvious. So if we draw our head and shoulders, obviously we get the neck, and one of the ways we gain confidence in any trend line, whether it's slanted or horizontal, is when price tests the level or the line from both sides. And so we can see that happening here. We've got price testing this level as support. Here it's testing it as resistance, 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 and resistance. So fair amount of confidence in that line. And then obviously we've got a shoulder and a head and a shoulder. So nice looking head and shoulders pattern there. To get a target from this pattern, you draw a trend line or a line from the neck down to the top of the head, and then you duplicate or clone that line, put it on top of the neck level, and then that gives you your target. And so I get a target about 1930 based on this head and shoulders pattern. And of course, obviously, for this pattern to remain valid, we need to see gold turn back up and head in that direction. Oh, and I didn't mention price is also dealing with resistance at the 200-day moving average. Briefly found support above the 200-day moving average, but has now pulled back. So let's keep rolling. This is silver in the monthly time frame. Again, continuation pattern. Found support at the bottom of the pattern. Horizontal support and resistance level. We got a little bit of an overthrow to the downside, but then pushed higher. MACD right at the zero level, but appears to be turning up and close to giving us a new buy signal. And so that would be a quite bullish for silver to get a buy signal with MACD in bull mode. Energy is mid-range, so not bad looking there in silver in the monthly. Here's silver in the weekly. Prices made a nice trip higher in the last few weeks and has pushed above the 10-week moving average, has pressed above the median line of this modified shift pitchfork, and currently is finding support above that level, or appears to be finding support above that level. Got a big support and resistance zone, this gray horizontal, and so price is dealing with that as well. MACD about half and half, bull and bear mode on a buy signal headed higher. Energy is very elevated. So based on this chart, I would suggest that silver is continuing higher in the weekly time frame. In the daily, same thing we saw in gold. It appears that basically a breakout trade. Silver broke above its prior high, pushed up towards, almost reached what would be resistance, potential resistance at the upper median line of this Andrews pitchfork before it rolled over. And it appears now that it's testing this breakout level for support and could be turning back higher. That's certainly what it looks like based on overnight and this morning's action. So notice that we're above all three of the moving averages, all three of the moving averages at this point. That's bullish. MACD in bull mode. Overbought, so we're getting overbought on MACD. Not a bad time to get a pullback, a little bit of sideways price action to work off or recover some from being overbought. Energy very elevated. So again, unless this support level fails, I'm expecting to see silver turn back higher. Mining stocks, this is GDXJ, that's my proxy for the mining stock sector. Found support at the lower boundary of this channel, turning upwards, pushing up into what could be resistance. It had the upper channel of the upper boundary of this pink channel has obviously acted as resistance, there, and there, and now we're pushing back up towards that level. So we'll have to see if that acts as resistance again. Looks like MACD is trying to turn up, still in bear mode. Energy in its lower quarter based on stochastics. Here in the weekly time frame, we got mining stocks dealing with resistance at the 10-week moving average and the upper median line of this modified shift pitchfork. So, and also in the support resistance zone, this gray horizontal bar. So fair amount of resistance to deal with. MACD in bear mode on buy signal, pushing up towards the zero level of that indicator, but not there yet. Energy very elevated. So again, expecting higher prices for mining stocks. In the daily time frame, more of the same, dealing with resistance, 200-day moving average, horizontal support resistance zone. MACD in bull mode, but becoming overbought. Not quite at the level of this prior high. So got a little bit more, could push to the top, push upwards, but becoming overbought. Nice run for the mining stocks last few weeks. Let's see, the dollar, we looked at this on Sunday, I believe it was, and appear to be bouncing currently off of this support level. Would be a new support level. This is the first time we're testing this level as support. Let's zoom up in a little bit here, and we can see you got a lower tail on this candle, which makes it look like this level is going to act as support. MACD remains overbought. Histogram showing that momentum is turning downwards. Energy is very elevated. So again, not going to surprise me to see the dollar head higher from this level. In the weekly time frame, price has found support on this minor support level and appears to be heading higher from that point, but has resistance at the 10-week moving average, and we're in this support resistance zone, the gray bar. MACD in bull mode on a sell signal, energy very low. Daily time frame underneath the 200-day moving average at this point, and it appears that that level is acting as resistance. MACD is in bear mode, but very oversold, and so based on MACD alone, reasonable to expect a turn to the upside in the dollar, just to work off this oversold level, if nothing else. Energy is very low. The debt markets. So my favorite chart in the debt markets, this is yield on the 1-year bill, appears to have reached I'm not going to call it a resistance level, but a level where it's taking a rest. And of course, after you've done this vertical spike, just from a technical perspective, you're due for a rest. And so not terribly surprising to see interest rates doing some sideways shuffling at this point. MACD in bull mode, extremely overbought. Energy remains very elevated. So no, can't really make a judgment based on this chart, other than very overbought, time for a rest. Not surprising that we would be resting at this point, but we're still in the big picture macro. We've got a global debt collapse going on. China continues to have economic challenges, real estate market. All of their property developers, real estate developers are having debt problems. And of course, that's one of their biggest industries. Other countries having debt problems. So Europe's in a state of you can't really call it collapse. Deindustrialization is the term that most analysts are using. So basically, Europe and Germany in particular are currently being deindustrialized because they willingly gave up on their source of cheap energy, which of course was natural gas from Russia. December 5th, yesterday, was the day that their sanctions came in. They can no longer buy Russian oil, petroleum, coming in on ships. And so what they're doing, it's super silly. So now they're going to buy Russian oil through proxies, China and India being the two main countries. So Russia will sell their oil to China and India. Those two countries will turn around and sell it to Europe, and of course they're going to mark it up. So Europe's currently paying LNG from the United States. They're paying about 6 times what they were paying for Russian natural gas, and they'll pay a markup, I don't know, 20%, 30% to India and China to act as middleman for Russian oil. It's just the ultimate silliness. And so anyway, point in all of that rambling is that we have global debt challenges that are going to continue to affect these markets. Obviously, we're getting a pullback in interest rates at this point, but not unreasonable to expect that it was just a pullback before rates head higher. We can see that here this is the yield on the 10-year note, has pulled back to this potential support resistance level, appears to be finding support at that level. MACD has reached the level of the prior low and appears to be turning up, momentum turning back upwards, albeit we're in bear mode, which would suggest that the primary trend remains to the downside. Notice that energy is turning sharply higher from this low level. So again, wouldn't be surprising to see that this was just a pullback and that rates are about to head higher. Across the board, this is yield on the 30-year. Notice this is the same, it's the flag pattern that we saw in the monthly chart of gold. There's the continuation part of the pattern. This is the flagpole. If you want to think of this as a flag flying, there's the flagpole, there's the flag, and then the expectation from the pattern is that when price breaks higher, it duplicates the length of the flagpole, and that's exactly what we saw here in the 30-year. Got a strong pullback. Let's throw a Fibonacci retracement on that just for funsies. So we've pushed below the 50% level, which actually suggests from a Fibonacci level or perspective that the next fib level becomes our target. Of course, that would be the 62%, which would take the 30-year a little bit lower down to, what is that, 3.45%. MACD in bull mode, but on a sell signal, energy very low. So let's see, that's the 30-year fixed rate mortgages, about 7% currently. And remember that in January of this year, you could get 30-year fixed mortgages at 4%. So not a double, but what is that, 70% higher than we were just a year ago, less than a year ago. So quite a hit on housing. You know, if you were shopping for $1 million house back in January of this year, and your financial circumstances have not changed, you're currently shopping for a house around 500,000. So basically your ability to buy housing has been cut in half by this increase in mortgage rates. So very, very substantial hit on the housing markets. And of course, one of the things about real estate is that all real estate markets are local. You can look at real estate on a national basis, but you really have to look locally, because you know the housing market in Southern California is still just sizzling hot, whereas in other places, you know, you look at Oklahoma, Arkansas, it's a whole different story. So Bitcoin, the crypto markets, we've had several events. Coinbase, did they declare bankruptcy? I don't. Coinbase has had problems. Obviously, FTX has collapsed. Notice that SBF, Bankman-Fried, whatever his name is, the founder of FTX, is still walking free. Definitely a connected person, appears to be connected. Interesting that he has not been locked up, prosecuted, basically getting a walk on having basically absconded with several $billion of his clients' money. He was using, there was FTX, and then he had a trading company, Alameda something, and he was basically using depositor funds from FTX in his trading company, Alameda, and it all collapsed. And so, and then he also had a $3 billion loan, and questions should be asked. It doesn't appear that they are being asked. What happened to that $3 billion? So anyway, Bitcoin just bumping sideways, currently below its 20-day moving average. That level appears to be acting as resistance. More resistance overhead with the 50-day, and then this horizontal support resistance level. MACD on a buy signal, but in bear mode, energy elevated. So Bitcoin could be trying to push higher, but it's got a lot of overhead resistance. Now we're looking at the equity markets, S&P 500 in the daily, currently tracking higher in the upper half of this shift pitchfork, resistance at the upper median line, support along the median line, currently bouncing off that level. That was yesterday. Resistance at the 200-day moving average. MACD is overbought and at the level, almost at the level of the prior high. So very overbought based on MACD. Still on a buy signal, but could be turning down there. Energy in the upper range. So wouldn't be, and support there at the 20. So if this trend continues, we should see support and a turn back higher in S&P 500. In the weekly time frame, resistance at the median line of this Andrews pitchfork, resistance at the 10-week moving average, playing with that moving average as support and resistance. MACD in bear mode, but on a buy signal, energy very elevated. So equity markets, S&P 500, could continue higher, but resistance overhead at that median line. In the monthly time frame, has pulled out of the bear market territory below 20%, currently above that level. We could, now I'm not going to call that a counter trend rally. Obviously it could roll over. Price can do whatever it wants to do, but wouldn't obviously call that a counter trend rally at this point. Let's back up to the weekly. Yeah, see, this is not, this price action is not consistent with a counter trend rally. A counter trend rally occurs when you get a sustained move in one direction or the other, and then a very sharp turn. Well, it's right here. That's a counter trend. So we've got a sustained move to the downside. That was a counter trend rally. Notice that it's sharp and impulsively moves in the opposite direction, and then price rolls over and heads back in the direction that it was in when it was doing the sustained move. So that's a good example of a counter trend rally. And notice that this move it doesn't have that sharp impulsive feel to it. So it could be more of a sustained move to the upside. Here's the Dow in the daily time frame. Looks like we're finding support along the 20-day moving average. MACD in bull mode, but overbought. So reasonable to expect some sideways action as price works off this overbought level. Energy upper end of its range appears to be heading lower based on stochastics. Weekly time frame in the Dow has pushed above the level of this prior high, and finding support at that level appears to be draw it in there. And so potentially support here and headed higher. MACD almost up into bull mode. Obviously on a buy signal, energy is elevated. So Dow in a weekly time frame looking pretty good. Maybe we get some more upside out of this. And of course, you know, if Santa Claus is going to come this year for the markets, we could see rally in the equity markets for the next few weeks, our Santa Claus rally. Brief dip down into bear territory, but bounced out of it. Now in the monthly time frame, that looks more like a counter trend rally, but we'll have to see. So sustained move to the downside, sharp move in the opposite direction, could be rolling over at this point, but I wouldn't bet money on that at this point based on the daily and the weekly time frame. The charts that we just looked at, MACD is in bull mode, suggesting that the trend is to the upside. Energy is elevated, and I just noticed that this would be very preliminary fork, but there's a potential fork right there, and notice that price is pushing up into the median line of that. This is a shift pitchfork, and price is pushing up into that median line, which is a potential resistance level. Daily time frame, NASDAQ, we could see price bumping along in this, basically it's channel, it's the upper half of this modified shift pitchfork. Resistance at the upper median line, support at the median line. Currently looks like we're getting support, a little bit of support from the 20-day moving average, MACD in bull mode, energy in its upper range. Weekly time frame pushing up into up towards the 10-week moving average. Appears to be finding support at the median line of this shift pitchfork. Support on the 50-day, or that's the yes, that's the 10-week moving average. That's the 40-week moving average. MACD in bear mode on a buy signal, energy elevated. So reasonable to expect higher prices in the weekly time frame of the NASDAQ, but potentially pushing up into a resistance level at that point. So got resistance overhead from both this moving average and this trend line. Monthly time frame on the NASDAQ, still have this parabolic curve in play. Price found support at that level and bounced higher, pushing up into resistance at this horizontal support resistance level. MACD in bull mode, appears to be heading, looks like momentum wants to turn back up or is trying to turn back up to the upside. Energy is very low. So, and still in a bear market. So have to acknowledge that the NASDAQ, the tech stocks, are still deep into bear market territory. Oil, this is based on the Brent crude, still doing its pullback. We've got this horizontal support resistance level, prices in that zone. MACD in bull mode on a sell signal, energy in the lower half of the range based on stochastics. And we still got, you know, we're still playing games with the SPR. The Biden administration still playing games with the SPR. So hard to get a read on oil at this point. And of course, we've got, again, in the macro, we've got the EU has just put a cap on Russian petroleum prices. I think they settled on $60 a barrel, and price has risen. since the cap was put into place. Russia is saying they're not going to sell oil to any country that goes along with the price cap. And of course, why would they? It's their oil. They can pick and choose who they sell to, who they don't sell to. And so just more silliness out of the globalists trying to cap the global price of oil. It ain't going to work. Anyway, I'm going to stop rambling. That's an overview of the markets. I will talk to you soon, folks.